Why has Hong Kong become the IPO capital of the world right now?
It's a great question. I think the reality is that you're seeing a lot of demand for Chinese companies to access capital markets, and Hong Kong has become a great place to do it with the support of the government and the regulatory bodies. Ultimately, what we saw was a little bit of a trickle come in at first, mostly because of this fear of US delistings and sort of this concept of homecoming. What we saw is that those initial trickle companies actually sort of showed really great momentum. There was a number of listings that were successful that tended to grow. We saw a lot of institutional support from the mainland via the southbound connect in for those issuances, and here we are, a lot of issuance on the year. Hong Kong, the second biggest equity issuance market in the world year to date, and 4 of the 5 biggest listings this year are in Hong Kong. So, yeah, great start to the half.
So the sourcing, the funding, right? You've got obviously institutional investors. You've got foreign money. What about the punters? And I ask simply because, I mean, all told, right, there's been just so much money in China looking for a home, a place to go, right? It's not going to go into property, or probably not a good bet there, right? And as you know, China has been for some time sort of a closed loop system, right? So that money has, if not property, it's gone into other places. It's gone into gold, right, into crypto, etc. Is that part of the reason why we're seeing an IPO boom in Hong Kong?
Certainly that's part of it, but I think if you deconstruct the numbers, one of the really interesting data points that we've seen is that if you look at the southbound, which that's the flow coming from mainland China into Hong Kong, southbound ownership of stocks is actually 50% amongst institutional investors now, so insurance companies and asset managers. So funnily enough, the retail are very much a part of it, but it's actually the institutions themselves which is the interesting part of it, and something that I think maybe a couple of years ago was a little bit unexpected. So it's really come from 2 different sources, but ultimately we're seeing in Hong Kong really some things that you can't get on the mainland. So it's still a closed-loop system, as you said. That's 100% right. But obviously, Hong Kong has been added to that via the southbound connect. But additionally, you've got names like Alibaba, JD, Tencent that you can't access on the mainland that you can access via Hong Kong. And people want to invest in those tech names from the mainland more than ever now. And so that really has been driving it.
Okay, so that's Hong Kong, that's IPOs, there's Renaissance going on there. Your space, special situations, also includes M&A, right? And right now in Japan, yeah. Right? Never thought I'd say that, right? We're finally seeing the kind of creative capitalist destruction that should have happened probably a long time ago.
Yeah, I mean, look, Japan has had 3 times as much M&A volume this year so far as we saw last year, so a lot happening there. And the great thing about what we're seeing in Japan, a lot of it is corporate governance related, so it's cleaning up of these sort of archaic, old-fashioned structures, cross-shareholdings, these kinds of things. So when we talk about that, we talk about things like NTT Data and being taken over by its parent company, NTT. We're seeing Toyota Industries being taken over by the family and that being unwound as well. And then obviously on the side, we've got Couche-Tard and Seven & I with a little bit of inbound M&A as well. So yeah, something for everybody there.
Yeah, Sherry, come on this.
Yeah, and I want to just continue talking about this restructuring governance reform story, but over in South Korea. So I know everyone is talking about the Value Up program, and you're talking about your specific focus on Korean banks, KB Financial, Shinhan, and Hana. What's the story there? What is the event-driven strategy there?
Well, really, the great thing about Korea right now is things are moving so quickly. So the Prime Minister in Korea has been pushing forward in regards to his agenda to create value there. And so we've seen, obviously, the commercial code, which has been a very big change in corporate governance in Korea, specifically because ultimately, that's going to be introducing things like fiduciary responsibility onto directors for the minority shareholders, which previously it only really extended to companies themselves. Now, the reason why this is important for Korea in general, but also for the banks, is ultimately we are seeing a push for improved capital efficiency. We're seeing a push for improved price-to-book ratios. And this is something that is a very, very concerted push amongst the government and the members of the Democratic Party in Korea. And so what we're seeing is increased dividends, increased focus on capital efficiency. We're seeing rules come into place in regards to the cancellation of treasury shares, which is again very relevant For many companies in Korea where there are large holdings of treasury shares, those are obviously cancelled. That's very accretive to earnings as well. So a lot of value being created in a lot of different ways in Korea.